Thank you for standing by, and welcome to Ambarella's third quarter fiscal year 2024 earnings conference call. At this time, all participants are in a listen-only mode. After the speaker presentation, there will be a question-and-answer session. You will be limited to one question and one follow-up. To ask a question during the session, you will need to press star 11 on your telephone. To remove yourself from the question queue, you may press star 11 again. I would now like to hand the call over to VP of Corporate Development, Louis Gerhardy. Please go ahead.
Thank you, Latif. Good afternoon, everyone, and thank you for joining our third quarter fiscal year 2024 financial results conference call. On the call with me today is Dr. Fermi Wang, President and CEO, Brian White, CFO, and John Young, VP of Finance. The primary purpose of today's call is to provide you with information regarding the results for our third quarter fiscal year 2024. The discussion today and the responses to your questions will contain forward-looking statements regarding our projected financial results, financial prospects, market growth, and demand for our solutions, among other things. These statements are based on currently available information and subject to risks, uncertainties, and assumptions. Should any of these risks or uncertainties materialize, or should our assumptions prove to be incorrect, our actual results could differ materially from these forward-looking statements. We're under no obligation to update these statements. These risks, uncertainties, and assumptions, as well as other information on potential risk factors that could affect our financial results, are more fully described in the documents we file with the SEC. Access to our third quarter fiscal 2024 results press release, transcripts, historical results, SEC filings, and a replay of today's call can be found on the Investor Relations page of our website. The content of today's call, as well as the materials posted on our website, are Ambarella's property and cannot be reproduced or transcribed without our prior written consent. Fermi will now provide a business update for the quarter. Brian will review the financial results and outlook, and then we'll be available for your questions. Fermi?
Thank you, Louis, and good afternoon, everyone. In a challenging market, our fiscal Q3 revenue was slightly above the midpoint of our guidance. Our business appears to be in the process of stabilizing as our customers seem to be making progress with their inventory management efforts. We expect our customers to emerge from the cyclical downturn at different times throughout the next year. And considering all of the dynamics at this time, we continue to anticipate we will return to growth in fiscal year 2025. We remain determined and focused on our strategic R&D priorities for the introduction of a portfolio of AI SoCs and the software targeting more sophisticated AI inference workloads. Our confidence in the secular growth opportunity for inference AI processors and the software remain high. And our long-term serviceable market opportunity, CAGR estimate, has not changed. Our CV2 family of SoCs is expected to lead us out of the cyclical downturn and represent a larger proportion of our total revenue in fiscal year 2025. As a reminder, this product family established Ambarella in the AI inference market, and these SoCs are expected to approach 60% of our total revenue in fiscal 24. In a single chip, the CV2 products typically provide both the video processing and the AI inference processing for one or more cameras. The average selling price of this product is close to $20, with a range below $10 to about $50. In particular, I want to point out that CV5, the flagship of CV2 family and the Ambarella first 5nm SoC, is forecast to generate meaningful revenue next year with more than 10 customers in production. Our CV3 platform is expected to generate production revenue from the automotive market in calendar year 2026 and beyond. The CV3 platform includes a family of SoC and software, and we began to sample the CV3-AD SoC a year ago. And today I'm pleased to announce during Q3, we received the first silicon for CV3-AD685 SoC, the flagship of our CV3 portfolio. And we are in the midst of a successful bring up of this extremely sophisticated 10 billion plus transistor SoC. We expect to deliver engineering sample to customer in Q1 next year, and we are on track through the previously announced award from Continental to the first OEM start production in calendar year 2027. CV3 SoCs are based on our third generation AI inference technology and serve significantly more challenging AI inference workload, such as a partial or complete autonomy in vehicles. In addition to providing in a single SoC, the perception processing for multiple camera inputs, CV3 SoC for the first time enables centralized processing of raw radar data as well as deep low-level fusion with data from other sensing modalities. The CV3 family SoC ranging in price from $50 to more than $400 per SoC. There are two additional elements of our CV3 platform, both of which are software. This includes Oculii adaptive AI radar perception software and our complete autonomous driving software stack, both optimized to run on CV3. Since November 23, we have been providing demo rides to OEMs and Tier 1s based on CV3 SoCs and our autonomous driving stack with centralized radar processing, low-level fusion, and the Oculii radar perception software. And we will continue to demo this at the CES in January. Now I would like to provide an update on our Gen AI plan. During the last quarter, with the implementation of new LLM software building blocks on CV3-AD, we have now successfully demonstrated inference running Llama 2 13B model with the SoC using LPDDR5 memory instead of high bandwidth memory, and operating at a fraction of the power consumption of incumbent solutions. Some of our existing customers are evaluating how they will implement Gen AI and large language models at the edge of their networks. With our successful LLM demos and additional analysis, we have concluded the powerful and highly efficient AI inference processor embedded in our CV3 SoCs is well suited for this edge market. We will have more updates on our LLM strategy at the CES 2024. Once a year, we update our automotive funnel, which is meant to be a reference for our automotive customer engagements over the next 6 years. We completed the funnel update in November, and it increased 4% from $2.3 billion to $2.4 billion. The funnel is comprised of one business of about $800 million and a pipeline of about $1.6 billion. With our automotive business expected to generate about $80 million in revenue this year, the $2.4 billion 6-year funnel is an indication of the strong growth we anticipate from the automotive market. There was a significant number of upward and downward revisions in the funnel calculation this year, including forecast changes and project delays from both Tier 1s and OEMs, projects won or lost in the pipeline, and the addition of new projects. CV3 represents a large portion of the current funnel, even though CV3 revenue is not expected to commence until calendar year 2026. I will now discuss representative customer engagement in this quarter. In automotive, we are continuing to win new designs in China, the world's largest automotive market. The open architecture of CVflow AI SoCs enable leading Chinese Tier 1s and ADAS software providers to develop highly differentiated, fully featured solutions. During the quarter, GAC introduced 4 new passenger cars models incorporating Ambarella's CV22AQ automotive SoCs in intelligent ADAS systems. This includes the GAC Chongqi E8 and ES9 and Ion Hyper HD and Ion S Max. Also, Hycan introduced its V09 minivan with the ADAS system also based on our CV22AQ. And the ACAIC introduced its Maxus Starjar 7 minivan, including a camera monitor system replacing left and the right mirrors, and based on our CV22FS functional safety SoC. In the automotive aftermarket, Asian market leader Thinkware introduced its QXD DVR based on our CV25 AI SoC and the F200 Pro 2-channel DVR based on our A12A SoC. And the European market leader Nextbase introduced its IQ Smart Dash Cam product line using our CV22 automotive SoC, featuring 4K resolution and advanced AI-based threat detection. In the enterprise security camera market, a number of leading manufacturers introduced new cameras based on our flagship 5nm CV5 and the CV52 families. Motorola introduced its new H6A product line featuring AI-based video analytics and up to 8 megapixel resolution based on our CV52 AI processors. And Japanese market leader iPro announced its new X series featuring total 9 model spanning box, indoor door, and outdoor door models up to 8 megapixel based on CV52 SoCs. And the Korean market leader Hanwha introduced its C34404 multi-directional outdoor camera based on our CV5 SoCs. Also during the quarter, Verkada introduced a CP52 E-Pen tail zoom camera based on our CV22 SoC, offering camera operators dynamic coverage of wide areas and featuring 5 megapixel resolution and 28x optical zooms. And Germany IDS introduced its first Ambarella-based camera, the NXT Malibu, for live imaging analysis based on our CV22 AI SoCs. In the smart home segment, Signify, the Philips lighting spin-off known for its Hue lighting products, announced its Philips Hue secure cameras. Based on our CV AI SoCs, the cameras can work with Hue lights to control lighting and the sound alarms to deter intruders. Also during the quarter, Ecobee, a leading home automation company, announced its smart doorbell camera based on our CV28 AI SoCs. In November, Insta360 introduced its Ace Pro and the Ace Action camera based on our CV5 and the CV52 AI SoCs. The Ace Pro is the first 8K consumer action camera, and both cameras include advanced AI features such as neural network-based noise reduction, 14 megapixel computational photography, voice and gesture control, and automatic video editing. Collectively, you can see overall design win activity is healthy across 13 different representative customers for 17 different projects, 9 in auto and 8 in IoT. Furthermore, 16 of the 17 representative engagements utilize our higher value AI SoCs. You can also see we are successfully implementing more sophisticated AI workload in our SoCs, as highlighted with the identification of 4 different CV5 customer engagements. Looking forward, we believe our newer products such as the CV5, CV72, and the CV3 are well positioned to support increasingly sophisticated AI inference workloads. And this new product ramp, and as we also capture more software value, we believe we can capture more value per design wins. Now I would like to give an update on changes to our management team we previously announced in October 18, 2023. Brian, our CFO, will retire from his role as a CFO at the conclusion of the current fiscal year ending January 31st, 2024. I would like to thank his contributions to the company, including helping navigate the challenging inventory correction the semiconductor industry is currently experiencing, as well as continuing to strengthen our financial team and position us for success as we continue our transition into larger markets. I am also pleased to announce that John Young, currently our VP of Finance, will assume the role of CFO on February 1st, 2024. John has been with Ambarella for more than 6 years, serving in a variety of finance and accounting roles, and we are confident that he will continue to be a valuable contributor as we seek to drive our transformation forward and grow shareholder value. Now I will hand it over to Brian to discuss the Q3 results and outlook in more detail.
Thanks, Fermi. Before I begin, I'd like to thank Fermi and the board for the opportunity I've had to be part of the special team here at Ambarella. The timing of my upcoming transition is facilitated by the progress we've made in developing the people, processes, and tools to support Ambarella at the next levels of growth and profitability. I have complete confidence in John's ability to take over as CFO and the team he has to support him. I look forward to their ongoing success. I'll now review the financial highlights for our third fiscal quarter and provide a financial outlook for our fourth quarter ending January 31st, 2024. I'll be discussing non-GAAP results and ask that you refer to today's press release for a detailed reconciliation of GAAP to non-GAAP results. For non-GAAP reporting, we have eliminated stock-based compensation expense along with acquisition-related and restructuring costs adjusted for the impact of taxes. For fiscal Q3, revenue was $50.6 million, slightly above the midpoint of our prior guidance range, down 19% to the prior quarter and down 39% year over year. As expected, the sequential decline in revenue was driven primarily by our IoT end market. Non-GAAP gross margin for fiscal Q3 was 62.6%, in line with our prior guidance range. Non-GAAP operating expense was $44.1 million, down $1.9 million from the prior quarter, and below our prior guidance range of $46 to $49 million, driven by continued expense management and the timing of spending between quarters. We remain on track to our internal product development milestones. Q3 net interest and other income was $1.1 million, and our non-GAAP tax provision was approximately $650,000. We reported a non-GAAP net loss of $11 million, or a 28-cent loss per diluted share. Non-GAAP EPS was 11 cents better than the implied midpoint of our prior guidance range, driven primarily by lower operating expenses. Now I'll turn to our balance sheet and cash flow. Fiscal Q3 cash and marketable securities increased $5.8 million to $222.3 million. DSO improved from 45 days in the prior quarter to 42 days, while days of inventory improved from 147 to 145 days, down $4 million from the prior quarter. Cash from operations was $7.9 million, and capital expenditures for tangible and intangible assets was $2.4 million. Free cash flow, defined as cash from operations less CapEx, was 11% of revenue for the quarter and 6% on a trailing 12-month basis. We had 3 logistics and ODM companies represent 10% or more of our revenue in Q3. WT Microelectronics, a fulfillment partner in Taiwan that ships to multiple customers in Asia, came in at 54% of revenue. Chicony, an ODM who manufactures for multiple IoT customers, was 12% of revenue, and Hakuto, a logistics partner who primarily supplies multiple automotive customers in Japan, was also 12% of revenue. Now I'll discuss the outlook for the fourth quarter of fiscal year 2024. The near-term revenue outlook appears to be stabilizing. While customers continue to manage their inventory levels and some pockets of end demand softness persist, ordering patterns and customer feedback suggest that our revenue is leveling out and likely to resume growth in our next fiscal year. For fiscal Q4, we estimate that our total revenue will be in the range of $50 to $53 million, with IoT up slightly and automotive about flat. At this time, we anticipate that sequential revenue growth will continue into our fiscal Q1 in the low to mid-single-digit % range. We expect fiscal Q4 non-GAAP gross margin to be in the range of 62 to 63%. We expect non-GAAP OpEx in the fourth quarter to be in the range of $45 to $48 million. with the increase compared to Q3 driven by CES marketing activities, R&D tied to new product development, and less favorable foreign exchange impacts. We estimate net interest income to be approximately $1.5 million, our non-GAAP tax expense to be approximately $600,000, and our diluted share count to be approximately 40.4 million shares. Ambarella will be participating in a fireside chat and hosting one-on-one group meetings on December 5th and 6th at NASDAQ's and Morgan Stanley's London conference. We also will be participating in Omero's CES one-on-one conference in Las Vegas on Monday, January 8th. We expect to host more than 20 investor groups during our CES 2024 exhibition from January 9th to January 12th. Please contact sell-side analysts to make reservations. We will also present and host one-on-one and group meetings at the Needham Conference on January 17th in New York. Please contact us for more details. Thank you for joining our call today, and with that, I'll turn the call over to the operator for questions.
Thank you. As a reminder, to ask a question, you will need to press star 11 on your telephone. To remove yourself from the question queue, you may press star 11 again. You will be limited to one question and one follow-up. Please stand by while we compile the Q&A roster. Our first question comes from the line of Joe Moore of Morgan Stanley.
Great, thank you. I wonder if you could talk about the adjustments, Jeremy, that you discussed to the funnel. You had said that you saw some business kind of coming out. And I know you had a number of businesses there that were probability weighted. What's happening to that when that happens? Is that because the programs are just moving more slowly? Is it competitive? Is it supply chain? Can you just kind of give us an indication of why there would be those adjustments?
Yeah. Thank you, Joe. I think let me address that question. In fact, in the script, we talk about 4 different factors. The first factor is that forecast change from Tier 1 and OEMs. For example, for some of the projects that we have won, and the forecast of those projects would reduce, particularly in the last several months, we start seeing that trend. So that's the first factor. The second factor is we start seeing project delays. For example, for some of the projects that we have won, the production date is pushing out, and also for some projects that we're in an RFQ phase, the decision of those the decision of the award is also got to push out. So I think that's the second factor. But also the third factor is really that we continue to have a new project or RFQ that we're bidding on, and we have different multiplier, like you said, different confidence level for different projects, and that's a new project we bid on. The last factor is really the project that we won and lost at the end. So if you ask me, I think the first and second factor really negatively impact our funnel number, but the third and fourth, the net effect in the third and fourth probably help us to continue to add numbers into the funnel. So that's the reason we have this minor increase on the funnel numbers.
Great, that's helpful, thank you. And there's still an awful lot of growth over multiple years implied here. How does that profile look versus a year ago? I know you've talked about a lot of success in China. Do you see more of a China skew to your numbers in the next, as you start to ramp the advanced CV features?
Right. So I think that first of all, this funnel, on the one portion, this is the first time we start seeing CV3 contribution there. In the pipeline, definitely CV3 continue to getting higher and higher percentage of a funnel number. One thing I can say that in addition to the first CV3 design win we announced last 2 times ago with Conti, we add extra non-Chinese commercial vehicle design wins with CV3 and in this pipeline. So we definitely continue to make progress on that. And the trigger for those design wins is after we demoed the working 685 CV3-685 chip, and also demo this software stack we talk about, our AI software stack that can integrate all of from the fusion to the radar as well as all the path planning. So we successfully demo those things to OEM tier ones. Those two factors help us to secure the design wins we just talked about.
Thank you. Our next question comes from the line of Tore Svanberg of Stifel.
Yes, good afternoon. This is Jeremy calling for Tori. I guess first, just wanted to follow up a little bit more on the adjustments made to the funnel. Can you talk about how maybe, on a broad level, how maybe, did the overall market in terms of maybe SAR impacted and how much that might have impacted the slight increase in the funnel? And then I've got a follow-up after that.
I think the global market definitely impacted two things. One is the forecast of the run rate of the project what we want. But also, I think you can read a lot of articles talking about for the level 2 plus or level 3 card, a lot of the new projects, the decision got pushed out because people are having different thoughts about their software stack, what's the function features, and particularly how to compete with China with their aggressive product planning. So I think all of those contribute to the first and second factor I just mentioned.
Great. And then moving to the AI inference accelerator business that you've successfully demonstrated. Are we right to read into it that it sounds like this is something that you're moving forward with, and can you talk about maybe your competitive positioning relative to whether it's the current incumbents, the number of private companies that are in the space, and maybe other large competitors that might start to move in? Can you just talk a little bit about? Yes.
I think you are referring to the LLM. So I think, yes. First of all, this time a little bit different than the last time. Last time we kind of talked about global, a lot of different applications because we haven't spent enough time on the marketing side. This time we kind of zoom in to say, well, we understand our strength is edge server, edge devices, particularly because we are in the market and we know a lot of customers in there, and we've also done enough demos and also talking to customers to understand our strengths against our competitor, both for large companies, also startup companies, and our strength is, first of all, we have a working silicon that we can give demo at a very good performance, a very low power consumption. I think that's key. The second thing is, for us, it's not just a silicon. In fact, we also have bundled software. We're going to show a development environment that we already introduced our customer, but we'll probably introduce to at the CES about how we using a software environment bundled with our current solution that enable edge device or edge servers quickly moving to AI model to help edge applications. So I think that's where we're focusing on right now. And it's not that we don't want to focus on bigger cloud or much bigger application. It's really that I think with our current silicon and our current resources, we would like to focus on areas that we know that we are familiar with and we want to know that we can win. Right? So I think that's where we are sitting on with the current plan. Of course, that we definitely need to build a roadmap, but however, like we said last time, our current commitment to LLM is using our current engineering resource, which is enough to do demoing system, developing the application, developing software for the edge applications. Those applications are using current resources. Had we decide to extend our roadmap or doing other applications, we probably need to talk about different engineering resources, which we haven't committed to that yet.
Thank you. Our next question comes from the line of Christopher Rowland of Susquehanna.
Hey guys, this is Matt Myers on for Chris. So you guys talked about first quarter potentially growing low to mid-single digits. Maybe that's a little bit slower than we were thinking about. So I was curious is this more end demand driven or inventory driven, and how should we think about inventory dynamics into the April quarter by auto or IoT within enterprise or consumer too within there? And then how are you thinking about the shape of end demand into the first quarter and then through next fiscal year?
Well, I think that the data points that we're looking at in support of the growth we talked about for fiscal Q1 is based on, number one, looking at our bookings and backlog trends, which have absolutely improved. So our book-to-bill was much better in Q3 than what we've been experiencing for a number of quarters. And as we look at the backlog build into Q1, it's tracking well above the prior quarter, and it's supporting the growth range that we talked about. And so when we combine the data from bookings and billings and we compare that to the feedback that we're getting from our customers, as well as the requests that we're getting relative to push-outs versus pull-in of shipments, which have become much more balanced than they have been in the past, that gives us the confidence to talk about the beginning of growth in fiscal Q1 and then growth for the full fiscal 25. But certainly we have a ways to go. And, so that recovery is certainly helped by the turnaround of the inventory situation. End markets also seem relatively healthy and in support of that growth. But I would say the primary driver at this point is getting to the bottom of that inventory cycle and getting through that excess material at customers.
Got it. Thanks, Brian. And then I also wanted a question on video processors. So based off of you talking about CV2 being about 60% of revenue, there's clearly a big drop-off in video processor revenue this year. And if CV2 is going to continue increasing next year, what's your outlook here, particularly for video processors? And are you still investing a lot in this business or getting new wins here? And how should we just think about this particularly next year?
Right. So first of all, I want to point out, although we haven't really taped out a video processing only chips, but video processing technology continues to be a very important part of our offering in our AI chip. So CV2, all the CV family chip has a big portion of the the image processing or video processing technology in there. So I just want to clarify that. So this year, our CV total revenue approaches 60%. Obviously, it was what I just said. And also, if you look at the design win momentum, we have majority of that is CV. So I think the percentage will continue to go to favor of CV. But however, I think the decline of a video processor will slow down because that we have a big reduction in the last 2 years. But we still have long tails of a video processor chip that's selling to different market, including the enterprise security camera as well as automotive. So I think that we should expect a much less reduction on the video processor and with a very long tail.
Thank you. Stand by for our next question, which comes from the line of Kevin Cassidy of Rosenblatt Securities.
Yes, thanks for taking my question. This quarter, Hokuto, the Japanese auto distributor, came up as a 12% customer. It's the first time in a year or more. Is there anything happening there, or is it just because the overall revenue is down, or is there some new designs happening in Japanese automotive?
Well, I think that it's really that if you compare to previous quarter, our other business dropped quickly, and the Japan automotive, usually they just take at a fixed rate, and it's seldom to change the forecast. So it's not particularly anything happening in Japan, but it's really that outside Japan, the drop is significant.
Okay, thanks. And just as you're going forward with the consumer, and even as we consumer surveillance cameras, and with large language models being used, is there a time when the input for the consumer will be just their voice, they can program the device? Is that something you're working towards?
We are working not only just a language, we're working on multi-modality. I think, in fact, we think that the LLM for us, for our customers' application, most important thing is processing text also speech as well as image. All of them together, that adds the biggest advantage to our customer, and also that's probably one unique function that we can really differentiate against other LLM suppliers.
Thank you. Our next question comes from the line of Quinn Bolton of Needham & Company.
Hey guys, this is actually Neil Young on for Quinn. Thanks for taking my question. Wanted to ask, so it's been about a year since you announced the partnerships with Continental and Bosch. When do you believe we'll start to hear about design wins from these partnerships?
Well, we already announced a design win with Conti. We couldn't mention the OEM name, but I think we already did that. And you should, and in fact, I would say that our relationship with Conti continue to improve, and we are bidding on projects with OEMs together. In fact, that we cannot announce OEM design win without customer approval. But one thing I can say is that activity with Conti is heavy, and also we continue to believe that the engagement between Conti and us are getting tighter and tighter, both on the hardware design as well as the software design.
Okay, great, thanks. And just another follow-up. So there's been some press reports suggesting that Continental is considering divesting its automotive assets, including its autonomous mobility business. How would a divestiture of this business affect your guys' partnership? Thanks.
Well, yeah, we heard similar the reports. I think one thing I can say is, based on our conversation with Conti, we continue to believe this division that we're working with is continue to be strategically important for both Ambarella and also Conti. And like I said, and with the close development that we continue to have, we didn't see any sign of slowdown on the Conti side. So we continue to believe this relationship is important, and also the product that we're working on is continue to be important for both AMBA, Ambarella, and the Conti.
Thank you. Again, to ask a question, please press star 11 on your telephone. Again, that's star 11 to ask a question. Our next question comes from the line of Martin Yang of Oppenheimer & Company.
Hi, thank you for taking my question. Just one question. Can you maybe comment on the progress for customer design engagement regarding your CV72 products in the automotive market?
Yes. CV72 is automotive product is designed for Chinese market because it's not ASIL, so that only Chinese only applicable to the Chinese market. And also, last time we talked about we have multiple tier 1 design wins, and also at that time, last time we talked about all of the tier 1s are working on building a demo system to show to OEMs. And in fact, one of our tier 1 just yesterday demo live, broadcast live demo driving a car based on CV72 ECU from the Shanghai airport to the downtown Shanghai autonomous driving. So I think that we continue to make huge progress, and we are ready to, in fact, we already start that demoing to OEMs, and also, like I said before, I think CV72 position in a very favorable price performance for the middle end of a level 2 plus solution in China, and we continue to believe that we have a competitive solution for that particular market. And we are working closely with the tier 1 to talk to OEMs. Hopefully that we can announce some design wins soon.
Thank you for me. A quick follow-up on that CV22 activity. Can you maybe remind us on the expected time frame of design win and shipments?
All the project we're bidding on is production the end of 2025, and the revenue coming from 2026. So the design win has to be maybe first half of next year, and spending 18 months of development cycle to get it done.
Got it. Thank you.
Thank you. I would now like to turn the conference back to Dr. Fermi Wang for closing remarks. Sir?
Thank you, and thank you everybody for joining us today, and I'm looking forward to talk to you soon. Thank you.
This concludes today's conference call. Thank you for participating. You may now disconnect.